Welcome to Earnings Central. In this video, we'll break down Apogee's third quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q3 was $332.3 million. The company actually reported revenue of $341.3 million, surpassing expectations by 2.7%. This quarterly revenue also marked a slight 0.5% increase compared to the $339.7 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q3 was $1.10. The company actually reported an EPS of $1.19, exceeding expectations by 8.2%. However, this result reflects a 3.3% decrease compared to the $1.23 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Apogee continues to demonstrate solid operational performance, maintaining their full-year adjusted operating margin target of approximately 11%. This shows their ability to maintain profitability even in challenging market conditions. The services segment remains a bright spot, with a substantial backlog of $742 million. While this represents a slight decline from the previous quarter, it still provides nearly 2 years of revenue visibility, which is impressive in the construction industry. A significant highlight this quarter was the LSO, large-scale optical segment, which saw sales jump 28% thanks to the addition of UW Solutions. This acquisition is already making its presence felt in the numbers, though there was some organic decline in the retail channel. Looking at cash generation, Apogee produced $31 million in operating cash flow during the third quarter. While this was below last year's record levels, it still demonstrates healthy cash conversion and financial stability. Speaking of financial health, the company's leverage ratio stands at 1.3x after completing the UW Solutions acquisition. This relatively conservative leverage position gives them flexibility for future strategic moves while maintaining financial discipline. For the full year, Apogee is planning capital expenditures between $40 to $45 million, showing their commitment to investing in the business while managing expenses carefully. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The most prominent theme is the continued softness in non-residential construction markets. This weakness has been particularly noticeable in interest rate-sensitive sectors like office buildings and commercial spaces, creating some headwinds for the company's framing and glass segments. In response to these market conditions, Apogee's services segment is strategically shifting its focus toward healthcare and education projects. These institutional sectors have shown more resilience and benefit from government funding, making them more attractive targets in the current environment. The integration of UW Solutions, their recent acquisition, is progressing according to plan. Management expressed optimism about how the teams are coming together and the opportunities they're identifying to leverage their combined capabilities for growth. Looking ahead, Apogee maintains a strong M&A pipeline. They're actively evaluating opportunities to add differentiated products that align with their strategy and can enhance their margin profile. The company's healthy balance sheet positions them well to pursue these opportunities when they arise. A particularly exciting area of growth is industrial flooring, which came with the UW Solutions acquisition. This business provides significant exposure to renovation and repair markets, along with opportunities in warehouse and distribution center projects. The company sees this as a key growth driver moving forward. However, there are some headwinds to consider. Management indicated that glass margins, which have been running in the high teens, are expected to moderate to their target range of 10 to 15% in fiscal 2026. This adjustment reflects their realistic outlook on market conditions while maintaining healthy profitability levels. In conclusion, while Apogee faces some near-term market challenges, they're actively positioning themselves for long-term success through strategic acquisitions, market diversification, and operational efficiency. Their strong balance sheet and focus on higher margin opportunities suggest they're well equipped to navigate the current market environment while building for the future. That wraps up our recap of Apogee's third quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earning Central.